Wall Street is suddenly waking up to the fact that AI might impact a larger number of industries and faster than they had expected.
What this story is about is how AI disruption fear is leading to sell-offs in parts of the market outside technology. On Wall Street, rising fears about artificial intelligence, and specifically where it will disrupt certain companies, are sending shares of those companies tumbling.
Wall Street has done an about-face. Investors were concerned that AI was costing too much and might lead to a big bubble with untold harms. Now investors are concerned that AI is going to be so disruptive that it renders countless businesses obsolete. There's definitely been a spillover, starting with concerns about legal services, SaaS companies, heading into insurance firms, tax preparation services, financial services, each of these in reaction to incremental AI products. The market sell-off really started in early February when Anthropic introduced a plugin to an existing product, one that they did not even really do a formal announcement for.
So what we saw on February 10th, for example, was shares of wealth management companies sell off after Altruist, which is a little-known AI startup, came out with a new tax strategy tool. Look at the stock slides of companies like Salesforce, Charles Schwab, and Blue Owl. Investors are concerned that AI might be able to replicate their offerings soon. The fear for investors right now is that they're going to get caught up in the next version of this sell-off, and so they're really looking for ways to avoid that.
Let's take a step back. In November of 2022, OpenAI kicked off the AI boom. When ChatGPT launched, people were mainly using it to spit out clever song lyrics and poems and pithy responses to things. But what we've seen in the last year or so is that people have been using these to shop for products online, do more advanced online research, and even build apps from scratch with little expertise. Wall Street now seems to be waking up to the fact that those same tools can be used across different sectors.
These tools are coming out and they're good. And so what we're seeing is investors really worried about the parts of the market that are tied to AI risk and looking instead to go more into the AI winners. This chart depicts two baskets of US listed stocks from UBS research analysts. One is AI winners and one is AI risks. So you can see there's been a massive divergence as investors look to avoid companies associated with these risks and flock towards the AI winners.
That technology has been very disruptive in a certain corner of the world, particularly Silicon Valley. But in recent months, it feels like there's been a mainstreaming of it, where we're seeing broader awareness, right? You can use that same technology in your everyday life or in other sectors, even if you don't really want to code.
We've seen video game stocks get hit after a new Google Gemini launch. We saw insurers get hit after a startup came out with a new product. And even more recently, real estate stocks are selling off as investors think that this could be the next place that's going to get hit.
At the moment, Wall Street seems to be whipsawing between two different, extremely opposing views. There are investors who are concerned that tech companies are spending too much money to build AI services with an uncertain payoff. On the other side, investors are anxious that AI will be so disruptive that it renders numerous businesses obsolete.
I've definitely heard sources say that they just don't understand how both of these things can be true at once. They don't think that these knee-jerk reactions would be happening if we weren't near record highs on the S&P. We don't know what next feature or new product is going to be released that sets off the next sell-off, so really we're just watching to see what happens next.
Unsurprisingly, it's hard to predict where things go from here. What's clear is that the large AI developers and a long list of AI startups plan to bring advances to more and more sectors as they try to make money from this technology. So we should expect that if Wall Street is now worried about how disruptive AI could be, there will be plenty more moments in the months ahead for them to be concerned.